In 2001, I went through a pretty deep recession with my clients, invested almost exclusively in stocks, bonds, cash, money market type of liquid investments. In 2008, we were in a much more severe recession. It was probably twice as deep as the 2001 recession. Well, back in 2001, fortunately, public real estate trusts and bonds managed okay somewhat as a hedge against those equity positions that took pretty big drops. In 2008, however, you saw the financial markets really wrap their arms around all other sectors and drag almost the entire economy down. So your public REITs, bond funds at large, other public investments that were highly liquid, all went down in value significantly. Even high quality bond funds down 20–30%. That didn't happen in 2001. There was really nowhere to hide in 2008 in the public markets. Well, that's why I want to talk about alternative investments. In the last 20 years, there have been about 2 to 4% returns for the average equity investor. Okay? In the same period of time, endowment funds, the big ones, over $1 billion in assets, averaged closer to 9–10% returns. Some of them 11–12% returns. Because they had one sector of their portfolio that did far better than what most individual investors had, and those were alternative investments. So the average individual investor has a 0% allocation in alternative investments, while the average endowment fund with over $1 billion in assets has a 35.5% allocation to alternative investments. And by doing that, it was able to, they were able to lower their risk and increase return. Now, Harry Markowitz won a Nobel Prize for his work of decades that suggested that the proper organization, an intelligent organization of asset classes, can lower risk and increase return. Now, generally, we've been conditioned to believe we lower risk, that means lower return. Well, the whole idea of creating alpha, which is the units of return that we're getting for the units of risk that we're taking, is in an intelligent design of assets. Well, if you're a private investor, you want to look at some of the strategies using alternative investments that endowment funds have used for decades with a high level of success to lower risk and increase return. Visit our alternative investment video so you can learn about what some of those alternatives are and if they ought to be in your portfolio.